Right now, the way we move goods around the world is hiding a massive opportunity, an estimated $2.5 to $6 billion in potential savings. The reason this money is hard to reach is that global trade still runs on a mountain of slow, expensive, and easily lost paper documents. This isn't a new problem. If you look at a shipping receipt from 1878, you'll see the same handwritten dates and physical signatures that many companies still use today. To see how digital tools are changing this, we'll follow a shipment of 10,000 laptops from a Tokyo factory to a New York buyer. As the speed of trade picks up, businesses are starting to replace these century-old paper trails with digital tools that can keep up with the pace of modern commerce. Our journey begins at the factory in Tokyo. To manage thousands of laptops, the company uses a software system that connects its manufacturing, finance, and shipping departments into one shared data pool. This is their ERP system, essentially the central nervous system of the whole company. This system allows the factory to send a digital invoice directly into the buyer's computer in New York. Because the data moves instantly from one system to the other, there's no need for anyone to type in numbers by hand, which cuts out human error. In the past, getting a simple order confirmed across the ocean meant relying on slow, physical machines like this vintage telecopier. Today, these computers speak to each other using EDI. Think of it as a universal digital translator that takes a purchase order from New York and instantly converts it into a format the Tokyo factory can use. By organizing their internal data and using a digital translator to speak to partners, companies can move much faster and avoid the costly mistakes that happen when people have to translate documents manually. But shipping across oceans creates a challenge: trust. How can a buyer in New York be sure that the digital shipping records haven't been changed or faked by someone along the way? Businesses use a shared database called blockchain. Whenever a shipment moves, a new data block is permanently chained to the board. Without a central boss, no one can change what's written. Everyone sees the exact same permanent record. On top of this board, we can set up smart contracts. Think of these like a digital vending machine. The moment a shipping carrier confirms the laptops have arrived, the code automatically triggers the payment to the supplier. Combining this unerasable record with automatic payments means businesses no longer have to wait days or weeks for a human to manually review and approve the paperwork. While the digital data moves instantly, the physical laptops are still in a container at the port. The smart contract needs physical proof they are safe before it releases the money. That proof comes from the Internet of Things, or IoT. These are small sensors attached to the containers that act like fitness trackers for the cargo. These sensors send back real-time updates on where the laptops are and even the temperature inside the container, proving the goods haven't been damaged or delayed. All these sensors and old documents create a massive, chaotic library of information, often called big data. To make sense of it all, banks use AI as a high-speed librarian that can instantly read, sort, and even decipher messy handwritten records. When banks have this kind of real-time visibility into where the cargo is and what condition it's in, they can provide the funding for these trades with a much clearer understanding of the risks involved. You might wonder if using a shared system means your competitors can see your private financial details. Actually, these business networks are built with strict permissions. Only the specific partners you're trading with can see the data for your shipment. It's also common to worry that only giant corporations can afford this kind of technology. But most small businesses don't build these systems themselves. They use platforms provided by global banks, which allows smaller players to use the same advanced tools as the biggest companies. From organizing with an ERP to tracking with IoT and trusting with blockchain, the journey of these 10,000 laptops shows how trade is becoming faster and more transparent. Looking at these tools, which one do you think will be the most important for a small business trying to grow globally? Let us know your thoughts in the comments.